Hi. So this would be the third session where we'll be discussing about the different types of facilities, because in loan syndication market what happen where the investors they apply for a credit limit, and private equity funds or maybe hedge funds, or you can say like even financial institutions, they offer credit facility is nothing but it's just a loan amount where they approved it, right? And once they approved, then that particular company or let's say counterparty, they'll start utilizing that amount for their business purpose. But I'll explain that with the very layman and simple example how facilities works. But before that, you should see this, how or what are the different facilities, or I would say like why we called facility in loan syndication market. So you should see this here. So see, if you see in loan syndication market, there are three to four different facilities. So if you see, first one is breeze facility. Breeze, it means it's a very short term loan. Short term, it means very short term. The duration would be less than year. Like let's say for a 3 months or maybe 6 months, 9 months, or maybe max to max 1 year. Within that period, your loan amount means counterparty will repay that loan amounts back to the fund or maybe institution. So that facility you can call it as a bridge loan or bridge term or bridge facility. It is for a short term duration. Then what about term loan? Term loan, that you can say the duration would be 1 to 30 years. In a generic way, means in a recently trend which we have seen for a term loan is 10 to 30 years in between. And most of the closed funds, P-closed funds, and even hedge fund closed funds, they invest in term loan facility. It's like a home loan, pure home loan business. When you apply for a home loan, what happened? You apply for a home loan for a next 20 years, next 30 years, next 40 years. The similar way, a business is in a need of fund, then business can apply for a fund for more than 20 years, 30 years, depends on their restructuring plan. If they have a plan for 20 years, they can apply for a loan for the next 20 years, and they can take a credit facility and utilize that for a business expansion or development purpose. So it means if we talk about term loan, so in short, if any organization has a requirement of a long-term funding, then your term facility come into picture. You might see here three different categories, which is short term, medium term, and long term. So long term basically for 10 to 30 years, medium term 5 to 10 years you can say, and then short term it means 1 to 5 years. If any company or any counterparts apply for a term loan facility, so that becomes long term. Or maybe most of the closed and private equity funds or hedge fund, also means closed and hedge funds, they participate in such a transaction and offer funding to the businesses. All right. Then what about revolving? Revolving is a very interesting one. If I ask you a question, let's say you have a credit card, right? Just go and check it. You have just plastic credit card. But if you see the pattern, let's say your salary is 10,000, then bank approved limit of 20,000 or maybe 30,000, so that you can utilize that amount up to 30,000, right? Let's say you have a limit of 30,000 and you have utilized only 10,000. Then what you can do, you can utilize that amount, let's say for 1 month, 2 months, so depends on your credit management cycle. And if you have, let's say, received your salary as such, then you will repay it. But again, next time when you would be in need of that fund, again you can utilize it. So what it means? So it means you are rolling over that credit limit. You are utilizing it and again repaying it. So it means utilize, repay. So that becomes your revolver facility, right? So revolver facility, it's like a credit card of companies. And if I talk about term loan facility, you can here apply your home loan, right? Home loan. And if I talk about breach facility, it's a short term, credit, short term credit. It is for less than 1 year, short term credit, that you can say. All right. And now I'll talk about delayed draw. Delayed it means late. Draw it means whenever you need a fund, you can draw it. So that becomes your delayed draw. Term loan, it means again it's a loan. So what it means, you can sign an agreement with counterparts. Let's say you have signed agreement with counterpart for the next 10 years, right? You have signed agreement with counterpart for next 10 years with, let's say, $10 billion amount. But for a first year, you just required 1 billion amount. That's fine. You don't need to withdraw $10 billion amount. You just need to withdraw $1 billion. Just withdraw $1 billion, utilize it, right? And if you want to return, then you can return it as well. So that becomes your delayed draw term loan. So it means you don't have any certain investment plan, or maybe you don't require entire funding at the moment. You will need that fund on time to time. So it means this facility offer that benefits. You can utilize the fund as and when required. So it means on the basis of your investment objectives. Simple. And you don't need to pay the entire, means let's say if the facility is for, as I said, 10 billion, but you have just utilized 1 billion. You don't need to pay interest payment on entire 10 billion. You just need to pay interest payment on only 1 billion. And that's what this delayed draw term loan is, a very interesting and even best for a credit management also. That helps companies to manage their credit or liabilities in an effective way. So that's all. Means these are the different types which we have discussed. But yes, I'll try to cover each facility with examples in a different sessions. But meanwhile, if you have any question as such, you can post me in comment section as well. So now, as I said, I'll quickly brief about why we call facility, right? Why we call facility. If you see, if I take the example, let's say again, same example, TCS is looking for a fund. Their board then, of course, they'll go to the market. Market, it means marketplaces like BSE, NSE, and you would see other marketplaces where bankers come together, right? And of course, that would be the financial marketplace. They'll come together. Same way, if I talk about private equity, their main job is to identify potential investment opportunities, and if they have any investment opportunity, then discuss that investment plan, funding plan, duration, everything with the board members. And if they both agreed, and of course they'll go ahead with their loan facilities. It can be revolver credit facility, it can be term loan, it can be, let's say, delayed draw, depends on their requirement. Depends on their, means borrower's requirement, what the borrower is looking for. And then lender just, it will make sure that the facility amount is available. Right? If they commit, if they agreed, then that facility amount, it should be available in the bank account to transfer funds to the borrower. Alright? So now, if I take the example of, let's say, term loan. This TCS is looking for a 10 billion. And if TCS, let's say, not TCS, sorry, if P fund, let's say Blackstone, if Blackstone agreed with their terms, then they'll sign again, or they'll approve limit for 10 billion. So it means TCS has a let's say funding need of $10 billion, and even private equity fund Blackstone, they have also need of $10 billion. But let's assume it in next 1 year TCS want to only utilize 1 billion, not entire amount, right? Then this private equity fund is also entitled to disburse 1 billion only. See, they have signed agreement for 10 billion. So that becomes your commitment, global commitment. That becomes facility. That private equity fund ensured the facility of 10 billion. But in terms of disbursement of a fund, private equity fund will only disburse 1 billion because TCS has a requirement of 1 billion now. If you see, if you apply this logic with your credit card, just think practically, guys. You have a, let's say, credit card with the limit of 10 billion, but now you want to utilize your credit card for only 1 billion amount. So don't you think that this business is like your credit card type of business? I'm sure yes. In a credit card also, go and check the credit card terms. That company, credit card company, record the credit card in the books of their company as a credit facility. So it means they are also offering credit facilities to the retail customers like us on the basis of your salary or other income sources. But when you talk about this loan syndication facility, so it means it's a organizational loan transaction. Of course that the value of transaction would be high. If I talk about credit card, it would be in lakhs or crores. But if I talk about this transaction, it would be in $1 billion, $1 million. Size of the transaction would be huge or large. But the documentation process, then your legal process, all other credit terms, everything would be remain same. There won't be any change as such. Because on credit card also, we are entitled to pay interest payment to the lender. In this facility also, private equity fund, when they offer 1 billion, let's say they have offered 1 billion with interest payment rate of 5% for per annum. So it means TCS will pay 5% interest payment for every year on 1 billion amount to this private equity fund. So that's how private equity or hedge fund, that you can say, they'll make money by participating in such a loan syndication transaction. And that's why we'll call it as a facility. Facility, it means facility of 10 billion. Why? The reason is maximum limit would be 10 million, and whenever the TCS need, they can withdraw that amount. So TCS will initiate the capital call or maybe funding call to the private equity funds or maybe hedge funds, and then they'll transfer that amount, means committed or facilitated amount, to the borrower as and when required. So this is how your facility words come into picture. It's just a facility. All right. Then outstanding amount, if you see, still there would be 9 billion amount which you would see unfunded, or let's say yet to process to disbursed amount or pending amount. Same as I said, in a credit card, what happened? We follow the same procedure. All right. So that's how your facility come into picture. But again, if you see, if you have any doubt in this particular example, of course you can text me in comment section, and you can also provide your feedback also, because your feedback is essential to improve the quality of content and all. So I would urge you, if you have any feedback as such, please post your feedback in comment section. And last request, again, if you guys like and share this content with others, that help us to generate more and more content like this for you. So it's your responsibility to like this content and share with your family members or maybe colleagues, friends, and people like who are desperately looking for a job. All right. And if you are looking for any paid courses as such, you can quickly text us. We have a recorded courses also that will share you the link. You can go through it. Thank you. Thank you for watching this content. We'll see you next video. Thank you. Meanwhile, you can go through this.